What's up, investors? It's been a while. It's time to do an account update. So guess what I'm doing? We're gonna do an account update. Sitting at 170,000 almost, which is a huge recovery off of the low bottoms. And as always, I'm going to take you through all the positions. I'm going to show you all the options, all the equities, all the internals of the account. I'm going to do a little relative comparison. It's going to be pretty nice. And by the way, I'm still thinking about pulling out a lot of the cash that's in this account to make it really start from 30K. I'm kind of working my way towards that. You'll see this huge number here. It's the buying power of the account. When I click on it, we're going to get a little bit more details about how much margin I'm actually using. It's only 51,000 left. In order to pull money out of the account, I have to, of course, clear that margin. But I don't want to do it yet until I recover a little bit more of my losses. Thankfully, Smith & Wesson and Paramount has been doing all right in the beginning of this year. And bounced off of that $130,000 low, so about 40K higher right now than at the end of the year or so. It's been a huge run. This is the week performance here, 4%. 1 month is about 26%. Year to date is what really matters here, 24% almost. So huge rebound. I was probably I was over 170K somewhere during the day today. So that was nice. The main culprits, of course, Paramount, Smith & Wesson. I've reduced the shares of both of these positions by about half. But before we get to that, here are the options positions. You can scroll through and pause the video player at any moment to try to figure out the exact position. So I've only have a few options left. PayPal. This one little spread on Alibaba that's due on the 2024, and then I have just a few calls sold against Smith & Wesson and Paramount trying to exit these positions. I don't think they're gonna reach $12.5 for Smith & Wesson and $25 for Paramount. However, just in case things fall apart a little bit, at least I'm not at a total loss. These are the equity positions. I got Apple, of course, the strongest position, 700 shares. Realty Income did all right today as well. Main Street Capital, Paramount, Smith & Wesson. This is my watch list down here. So the account health. Let's go into the investing tab and see what's going on here. Total money management. I can speak English. Total market value, which is total money under management, is 221,000. 50,000 of that is borrowed, leaving me with 848.95 in equity on the account. Positions by total return. Apple on top, back up to $13,600. Then it's Realty Income, Main Street Capital, my three longest held positions ever since I started the account, really. Just been adding to some of them. And then Paramount Global down 3.4K, $3,400, and Smith & Wesson down 10K at this point. I've taken some losses. I used to have over 8,000 shares of Smith & Wesson, so I took a lot of that at a loss. So if I do have any gains later in the year, I can offset them and not have to pay capital gains tax. So that's all great and groovy. Margin maintenance is now only $70,000. So if this account drops by 50% tomorrow, I'll still be alive. I'll still be kicking. So that's good to see, because that wasn't always the case. I mean, just at the end of the year, my margin maintenance towards the end of the year, I almost got called for a margin call. I got warned by Robinhood that my money is so low that I'm gonna have to sell some stuff. So thankfully, didn't come to that point. What else can I show you in the account? How about what the situation here with these two positions that I'm trying to exit? Still have over $13,000 in Paramount. I've been buying back some of these calls that I've sold to try to sell the position. And if we go into history you'll see the transactions of Paramount. I've been buying back some of these calls and then selling off shares pretty aggressively into this bull run here in the new year. And I've done the same thing for Smith and Wesson. I don't really want to sell Smith and Wesson, by the way. It's happening because I don't like the amount of money they've been spending. They're burning through their cash like crazy, and that's one of the reasons why I have held this position for so long. So even though it's in a downtrend and it probably will recover, I don't feel confident as much as I did before, even though the stock price has fallen, in holding this position. I still got $41,000 roughly at an average cost of $12.93 per share. So I've been selling this at a loss as well. I've been buying back some of these calls so I can sell some positions. Hopefully all that number of 50K comes down to zero pretty soon. Get rid of my entire margin. That'd be great if I can manage to do that. Let's do some relative comparison, okay? So the only one that matters here is year to date, but if I go to the SPY and Robinhood, it doesn't actually show the year to date. So I've pulled out just on Google the S&P 500 year to date. I've already clicked it here. This is the 1 day. So yesterday it was up, 1.2%. Year to date, it's only up 5.2% though, where I'm at almost 24%. So I'm really happy that I'm rebounding harder. But I'm not out of the woods. I have a lot of ground to make up. If we pull out a little bit to the 1 year chart, you'll see that the high it's actually 214,000. Over 214,000 was the high in August. And it looks like I'm not going to be reaching that high for quite some time. The reason being is that now that I've reduced the leverage, sold off a bunch of positions, even if they recover to their previous buying areas, I will not be at this number. So I won't see over 200K for quite a while, especially if I pull some money out of the account. 214, those were good times, good days. Perhaps, in retrospect, I should have taken some of my winnings, but hindsight is 2020, and it's really hard to look back and say, okay, I should have done that, That's obvious. But we can only learn from the lessons that have been presented to us and try to look forward and see what we can do from here. When it comes to the positions, the plan for the account for this year is to be somewhat conservative. I'm thinking I'm going to hold on to my Apple positions, sell 200 of those probably after earnings. I think the earnings, by the way, don't worry about it. I just took a shower. That's why my hair is all like glossy and wet. So don't worry about that. But I'm back on Apple. I think I'm going to sell 200 of those shares after earnings, perhaps. I am expecting an earnings beat. I think that they probably sold more iPhones that people expect during those like tough, recessionary times, especially towards the end of their earnings quarter, because I think that, with the reopening in China and all that, people are probably eager to spend some money. Or even without the reopening, the only thing that the people stuck at home can do is shop, right? So even though there isn't as much stimulus money in the Chinese economy as there was during the virus 2020 in the States and other countries around the world, I think that people still probably going, people are people, and the behavior is going to be the same. They're probably online shopping and stuff. So I'm thinking the iPhone sale, and the one thing that people need definitely when they're stuck at home is a really nice phone, right? So they can browse in peace. And even though Apple is not that big of a market in some of these Asian countries just because of the price tag and the premium, I do think that the sales are probably better than people expect. So I'm thinking that I'm going to wait for after earnings when Apple actually continues to power through and carry the market a little bit higher, all the way through the end of the month. And I'll probably sell some shares then. I'm looking at selling 200. Famous last words though. You never know. Let's take a look at the Apple chart. See what it looks like. So this is the 1 week chart. It had a nice thrust here from January 20th up until now. It was up $10. This is the 1 month chart. It's quite attractive, up 9%. And this is the 3 month chart. 5 year kind of looks like this. I can't really imagine Apple going back down to the lows of 2020, because it's a different company now. I mean, they have so many units sold on the company, and it's not like they decided to go crazy like other companies and go on a hiring spree and boost up production unnecessarily to meet non-existent demand. So they have been fairly conservative relative to other tech giants like Google, Microsoft's, what's the other one, Meta, with their pet projects. So I think they will survive this pretty well, and the earnings will continue to climb. I don't know about the middle of the year. I'm a little bit concerned. I don't know what the future holds through the end of the year, but I do think that the stock is undervalued. And where's the PE? I think the E on the side of the equation here currently is 22.55. I think the E is going to go up, meaning the earnings, and so this ratio is probably going to look like 20.5 or something like that, which is reasonable for a company like Apple. It's huge, it's enormous. You can fit the market cap of many good companies in there, but I do think that Apple is the champ, and they will probably have more earnings potential moving forward than other companies in the S&P 500 anyways. So I'm still betting on it. I don't have an emotional attachment to it. I'm willing to exit the position. I just haven't found a more attractive place to place. My English is just horrible today. I haven't found a better home for the cash than Apple at the moment. Unfortunately, if it existed, I would do it. My other two big bets, like I went over earlier, is Realty Income and Main Street Capital. They continue to dish out dividends, and I don't expect that dividend to decrease anytime in the future, in the foreseeable future. And I keep reinvesting the dividends, so I'm thinking that's a solid play. So it's going to be a little bit conservative. I'm going to take some money out and try to play it conservative. But we'll see what the future holds. I mean, tomorrow's probably going to drop because it's Tuesday, reversal Tuesdays. But I'm expecting the market to drift higher through the week and eventually end the month on quite a big high. So that's the account review. If you have any questions on the account, please comment below and just ask and tell me what you want to know. Everything about this account is, of course, transparent. You can, any statistic you want. If you want me to go to the history, I can browse through the history. Where is that account? Am I blind? I think I'm blind. I thought it was, is it under investing tab? No. Where's the history? Transfer, recurring, stock lending, statements. Anyway, I can't find the history for some reason. Maybe they changed the layout. But anything you want to know about the account, I'm willing to share. And I've just told you my plans. I'm trying to exit Paramount and Smith & Wesson as a losing positions, but thankfully they're rebounding. I mean, I don't know what else to say. That's about it. My outlook for the market is, initial thrust and then probably continue to drift down. Interest rates are still a big headwind. Everybody's still waiting for the housing market to crash. Like, I don't see many people throwing their cash back into the market immediately. Although I've been talking to a lot of people in real life. And it seems like a vast majority of people who have some kind of wealth or at least are active in the market being in a ton of cash right now, or have like 6-month bills or something like that from the treasuries, or buying, bonds and whatnot. So, and it's understandable. I mean, it looks like the inflation is calming down, at least in recent trends. And so being in cash or cash equivalents is actually fairly attractive. And I agree with that. I think it is very attractive. But there's got to be a catch somewhere. And I think the opportunity is actually in the stock market. Stock market actually usually does well in a low inflation environment, which we've had. It's a good inflation hedge over the long term. And I think money will just flow back in there I don't think that treasuries can keep up with inflation. They haven't traditionally. They have in short periods of time, but I can't see it persist for a very long time. Like inflation will win out if you are just sitting in bonds. Bonds were able to keep pace with inflation for a long time because um, the bonds were actually appreciating as the yield was coming in, but that dynamic is just no longer in place. So people will be getting fatter yield. However, the total value of these bonds will decrease, right, as the yield goes up. So I can't see it happening. But of course, I've been wrong before many times. I might be wrong again. In either case, I just gotta stick to what I'm doing, and hopefully it pulls me through and continues to win. The way I manage money continues to win over the long term against the markets. That's the hopes. So hopefully this year is a good one. It's starting off well, and hopefully the rest of the year goes the same way as January does. That's usually the case. So we'll see. Hopefully I do another update soon. And as always, I hope that you guys are making even more money than I am. Although it's going to be pretty hard because I've rebounded really nicely off of the lows. But if you were holding some of the big, tech companies, they've rebounded even harder than my account. I mean, Meta, Google, and what's the other one? Not Netflix. Microsoft. There we go. Microsoft's rebounded nicely too. So maybe you guys have. Let me know if you've been performing well this year, and how much you're up on the year-to-date chart. All right, that's it for now. Peace out.